And hello, everyone. Welcome to the Real Estate Show on KCMX News Media 880 and on YouTube at realestateshowOregon.com. I'm Pete Belcastro. This is Alice Lema. We're both real estate brokers with John L. Scott in Southern Oregon. We get together with you once a week to talk about our favorite subject, Southern Oregon real estate. And Happy New Year to you, everyone, as 2020 rolls along. Alice, how are you?
It's just been a great holiday, but it was a long holiday, wasn't it?
Yeah, it was. Yeah, it's still haven't even played the championship college football game. Not till Monday. Wow, here we are. Yeah, but a new year, new optimism, and I love the New Year's because everybody has a fresh start.
Yeah.
You know, and like the air is clean, and we're going to head into a presidential election year. It's going to be quite an interesting.
It's going to be a bumpy ride. Hold
next
on.
12 months. Well, with us today on the show is certainly not a person very familiar to us, and that's Guy Giles from Mutual of Omaha Mortgage. And Guy's been with us for many years as a resident expert in all things mortgages. And how are you? 2020 is a new year for you. How are you doing?
Boy, I was kind of the opposite. That whole holiday season seemed fast to me. I don't know.
It
Probably
did?
being out of town for a week and a half didn't help. But
Yeah?
But it's over and we're ready to get back at it. So, yeah.
How did you end up 2019 for you know, I mean, we always talk about that.
I did a little better than the year before, and I don't know how. Every year I think, how in the world could I do a little bit better than the last year, and it happened again. So just when I was doing my final math, kind of planning for this year. So,
well,
yeah.
That shows success. I mean, when you do that, because Alice is the same way, right? Better that you want to do more than you did the year before, right?
Yep. Yep.
And when you have a good goal, it usually works out that way. Now, you brought someone with you today, so introduce Derek for us.
I did, and it won't be long before he's the guy with the
Taking your
$35
place.
million. Absolutely. So, I have Derek here. He started with me about a year ago. We've been under the bank charter for the whole time. Basically, it just has to do with how our licensing is. So he's just kind of finishing up the rest of his. He'll take his test on Monday, but he's been in the Valley his whole life. And anyway, you're probably better at asking him a question or two. But anyway, he's up and running.
That was a nice introduction he gave to you, man. That's right.
Absolutely.
So what do you like about lending, about mortgage? I'm curious to why people do these things and these jobs.
Yeah, about a year ago, I just got introduced to it from Guy. And I actually did a deal with Liz Forrester here in town. And just getting somebody into a house and just seeing them, their excitement as they walk in and they realize that this is theirs, that was just really impactful to me. Getting, especially first-time home buyers, helping them purchase their first home, that's pretty eye-opening and gosh, really fulfilling.
Yeah. Well, I remember Guy saying when he was with us last year, interest rates were going to go up. Remember that? And they went the opposite directions. They came down, which we really
make
thrilled
stuff
about
up, man.
Yeah, well, we all thought it was going to go. We thought
We
it was going to
did.
be 6 or 7%.
You guys did, I was going to say. But they didn't do that. And
No,
there's
no appetite for that.
Yeah.
And honestly,
Yeah.
no matter what happens with the stock market or anything, we're not going back to that.
No.
I have
Okay, but didn't
no
that
doubt.
make the year, the low interest rates as they went? Don't you think that was we call it the fuel of the market? What do you think about that?
Yeah, I mean, it has to pencil to buy houses. And, I mean, we're already seeing people staying in their houses a lot longer than they used to just because, they got in on a good rate and they're concerned, as they move on to their next one, even though the rates are still really, really good. But, yeah, it absolutely fuels it as far as, it's all about your payment at the end of the day, how much you're going to pay. A lot of it has to do with regulations, being able to even get in and buy. We're at the point now where we're kind of past all of the people that had their foreclosures or had their short sales or all their things. And by the way, on a side note, if that happened to be you out there, I think I see everybody that comes through hundreds and hundreds of people every year, and everybody went through something and experienced something during this, and just it's not something to be embarrassed about. At the end of the day, Fannie Mae and Freddie Mac are the guys that couldn't keep their books in line, and they're the ones getting to write the rules for you now. So I've had this happen twice in the last week where people have come in and they're like, "Oh, I'm so embarrassed about this," and I'm just like, "You're not the one that caused your house to crash by 60%." And anyway, if you're not in the game, it's probably not a bad idea to get back in.
Do you guys think there's a lot of people who suffered, whether it was bankruptcies or whatever during that time? That was over 10 years ago now. We're in 2020. Are those expunged now? I mean, can those people come back enter into the market if you've been through bankruptcies and this kind of thing now after 10 years?
Absolutely. Even on our longest seasoning time, which would be the conventional loans, the Fannie Mae, Freddie Mac, where most people fit in, you're only 7 years out for that, so you're okay as far as when it was discharged. The FHA, the government, VA, FHA, they're a lot shorter, just a couple of years as far as being able to do something else there. If you did have a problem with a VA loan, you'll want to check your eligibility, though, and make sure, if you lost some of that eligibility from that last house. So anyway, you can give me a call, and we can help you with figuring that part out.
But what's really important to what he's saying is go and check, because a lot of times it's better than you realize. And even if it's not, if there's a few things you need to do to get things lined up so you can buy a house again, you need to know what order to do them in, and you need to know what to do. But a lot of times it's way better than you would expect, whether it was a short sale, a bankruptcy, a foreclosure, you gave a house back.
Absolutely. And and all the people that are, right now, even if your credit isn't great, it's probably better than the guy with the 800 credit score was a year ago, because the rates went down.
Yeah,
so,
and aren't the loan programs more forgiving now? Aren't there some programs where you can have a lower score?
Absolutely, yeah. We can go down. We can go down pretty far. I mean, if you're getting down into the really low 6s, the high 5s, there are loan programs. But if we can talk to you and maybe help you figure out a way, we're not a credit repair place at all, but we are good at looking at credit reports, and we might be able to run some credit scenarios for you and guide you. And if we can get you a little bit better score, get you up a little bit, even if you qualify, and then we can give you some ideas to get from 680 to 700. That's going to help your credit score quite a bit.
Yeah.
So it's just good to come in and talk, and we don't charge you anything.
First-time buyers sometimes don't have enough credit, and that is also something the lender can guide you through and get you prepared.
What starts somebody off on credit? I was talking to a young fellow the other day about that, and what's the way to get started in getting establishing credit?
Well,
rent something or what?
One good way, I mean, we do utilize alternative scores if we have to, if you really don't have any kind of a score at all. So we can look at telephone bills, we can look at things like that, and there are some manually underwritten loans that you don't have to have a credit score for. That said, if you go down to your credit union, don't do your loan with them. By the way, we're usually lower than that, but you could at least talk to them about a credit card or something like that. Okay. And just having that for a little while, charge up a little bit of fuel on it, and I mean, and I hate to tell people, go get credit to get credit. I mean, it's just, the whole thing is just, it's backwards. But really, if you can get a decent credit score, they're already starting to tie insurance premiums and different things like that onto your FICO score.
And those rates that we always talk about are dependent on those scores, right?
100%.
The scores. So, all right, Derek, what does it take if I've got? This is to me one of the most interesting things about credit scores. That is the type of default that you get on a credit score, right? So if you have an 800 credit score and I come to you and I want a loan, my chance of defaulting is 1 out of 1,500. You're going to give me that 3 point or 2 point or whatever that percent is, right?
The better rate.
Right?
Mm-hmm.
Yeah.
Right? But if I come in there with a 620 score, now my chances of defaulting are now 1 out of 15. I'm not going to get that, correct?
Right.
No.
Yeah, I mean,
right.
It seems a little counterintuitive. You're going to give somebody a higher rate if they're, so basically their payment is going to go up because they have that, and then that just kind of sets that whole snowball as far as that goes. But really, you do want to loan to people that you're going to have a good chance of paying back. So they charge points, and you can take the word point, throw it out the window, put the word percent in there. So if you're paying a point, you might have to pay that if you have a lower credit score. So you have a little bit more skin in the game if you're doing it. But they're actually a lot more forgiving on the FHAs and some different.
Do you ever see clients with really high credit scores but not that surprise you? That you think, well, I don't know if about how credit scores are made and stuff like that?
We've had some people with really good scores that had other problems, like their debt to income.
But can I be a young person and have a really high credit score?
Oh yeah.
Oh sure, yeah.
Okay. All right.
Yeah. There's some really amazing millennial folks out there that are doing great with their credit. They're very sophisticated and knowledgeable.
Okay.
And they're getting ready to buy houses.
Well, that's what it would take to do. What are rates today as we start the year? Generally, the rate, Derek, that we're seeing out
He
there. If I
tries to
come to you
trick you
for
on this one every week.
my favorite is the
You'll get sucked
30-year
in.
the 30-year conventional kind of thing.
Yeah.
Like that. What are they going? What are the rates?
Just like you were saying, like you were saying earlier, how credit score is kind of it really affects what the rate ends up being.
Yes.
The whole credit, the entire portfolio, their entire credit score, what makes that score up is what's going to give them their rate.
But as far as a
down
rate
payment,
goes,
a bunch of other stuff.
you know, and that's exactly what I've been saying for a while. Because he's like, "What's your rate?" And I'm just like, "What do you want it to be? I can give you a really
Yeah.
low rate and charge you one of your kids,
Yeah.
or I can give you a bad one and give you one of mine."
This last
So-
okay, I got a different question then. This last week, what did you what
Right
rates did you
around,
put in?
right around 4%.
Yeah.
Okay.
You know, and you know, and if you're paying points, that's going to be a little bit different. If you're not, we also have a Costco program where you know you could be in the mid-low ones, and when we're able to facilitate that, where we're still locally underwriting it and processing it right here local, but you don't have to deal with the 1-800 number, and you're still going to get kind of the best deal that you're ever going to
That's a
think
good
about.
thing. Do people use that a lot? That type of assistance
They-
from Costco kind of thing?
I mean, because I don't, you know, they don't send us leads. We're just able to use it because we are one of their preferred lenders.
I see. Okay.
I don't really know, you know, the percentage, but people, you know, do tend to go there because they, you know, they know
trust
that
the
they're going to
name,
get a
they trust
decent
that
deal.
name, right?
Yeah,
And it's
and
convenient.
Costco's kind of the middle of the road, what's going to kind of fit everybody bucket. So if for some reason you can't do it that way, you know, we could still put you in something else. But our rates are phenomenal when we go that route
Yeah.
on that.
Most rates today are what? When your clients come in, Alice, are they seeking conventional rates, loans, FHA loans, or kind of what's the preferred loan? Because that's changed over the years.
Yeah,
I mean,
it's
it
a
was-
real mix.
is
It's
it?
a real, yeah, we've got so many first time home buyers now. And then we've got people that are trying to do investing.
But what are they trying to? What loans are they trying to?
They're
get?
getting, well, the first timers are
First-time home
usually
buyers,
getting,
FHA.
yeah, they're getting FHA or USDA.
Okay.
Because the USDA program is
No money
federally backed, but there's no money down. So it's
100%
almost like,
financing.
yeah, it's like a civilian VA almost.
It's
So
in-
it's no money down.
And it's income qualified.
Yeah,
Remember
yeah.
that part of it
And then
too?
we've got some of those, I call them bonus programs, but it's the grant programs where, like Access, the food bank people are helping to provide grants for down payments.
Down
There's
payment
a
assistance. Yep.
couple of other
You're
grant
talking-
programs for that.
You're talking about the Rogue Valley Association of Realtors and their first-time home buyer
Yeah,
assistance program.
Right, and
Okay.
then but then there's also plenty of
Others.
people out there doing conventional 5% to 20% down. A lot of investors. It's a real mix right now.
Yeah.
And if you're at like that 5% threshold, and you know, anytime you have less than 20% down, you have to have mortgage insurance on the house. So there we have some community-backed second mortgages that are just interest-only loans that you just pay back, you know, as you're going along, to where you can get rid of that mortgage insurance. Or we could also look at lender-paid mortgage insurance, where if you have a good credit score, you can just finance that right in for, you know, looking at financing in $3,000 or $4,000 over the life of the loan is a whole lot cheaper than paying $100 a month for mortgage
Paying
insurance.
extra for it,
Yeah. So there's a couple of different ways, and it's just good to come in and see Derek or myself and just kind of talk about your different options, because there are a lot of them right now.
Well, we want our clients to be smart consumers, and getting
Yeah.
the loan, getting the right loan, is probably as critical as any component in the whole real estate transaction. Is getting the right loan, and you want to make sure that you know what you're doing with it. So we got a break coming up here. We're talking with Giles today and Derek Brite, our Mutual of Omaha Mortgage, and we are coming right back here to the Real Estate Show right after this break. Welcome back to the Real Estate Show on KCMX News Media 880 or on YouTube at realestateshoworegon.com. Don't forget you can check out any of our past shows at realestateshoworegon.com. They're all there, and there's some terrific topics and terrific guests who really provide so much information for us each
Lots
week.
and
here.
lots
My
of
goodness.
education.
Last week, Kim Ramsey from Nielsen Research Labs was here. Fascinating stories of wells and testing. We never even talked about mold testing.
We
with
didn't
her.
get to mold, but we did
And
talk
she-
about dirt testing and
She
water.
was so funny.
and-
She was so worried we can't fill an hour.
Oh,
we
yeah,
we can.
we can easily.
We can easily fill an hour with Guy Giles, because we talk mortgage interest rates with him. He's from Mutual of Omaha Mortgage, along with Derek Brite, who's with him as well from the same office here. So where are your buyers coming from today? Tell me where that's coming from.
Gosh, I even got a new guy from Hollywood this week. So
Wow.
there's a lot of people, you know, still moving up from LA, just trying to get out of that whole scene down there.
In migration, still
Yes. Yeah,
coming in.
everybody's, you know, a lot of Bay Area people still coming around, and obviously, you know, we have a lot of repeat repeat offenders that come around that are moving around. But like I said, people are staying in their houses a lot longer.
Well,
So
our market kind of goes up and down. We got about 40%. The last stats that we saw were 40% of our sales are from in-migration. The other 60 are from people moving up and down in our own market.
And we had some interesting numbers come out.
Yeah, what'd you find?
For 2019, that Oregon is still the #2 relocation place, and 20% of the people relocating here are retiring.
Yeah, I believe
I
that.
thought that was
Okay.
very interesting, and that is what we experience.
Yeah. Oh, we see that here. I mean, that's exactly
Yeah.
what we have probably
Yeah.
in the Rogue Valley here.
But to say 40% of our sales are from outside of the area, that's a huge amount of people.
And when you think about that year after year, especially in rural properties, you've got lots of new people out with wells and septics have never been on them and all the kinds of things that go with that. It's not as simple as it seems.
But that's why you need a
right?
good agent and you need a good lender so that all of that
Yeah.
goes smoothly.
You have some stats.
I have some very interesting stats. I'm so
What's
excited
your-
to say
What do you got?
that 2019 Southern Oregon real estate was $5.6 billion with a B. $5.6 billion in sales in Southern Oregon,
And
2019.
that's Jackson, Josephine, and Klamath counties.
Yep, in
The
all three counties.
5.6 billion.
Yep, and do you want to guess how many transactions?
I mean, oh boy, thousands. I mean, in our office there was like thousands. Okay, how many?
18,200. 18,200 transactions for 5.6 billion.
Now I want you to figure out, really in your head, what percent was that yours? So what percent of that was yours?
Well, I
zero. I mean, way down the line there. That's a lot. That's a lot of transactions.
yeah, and I
a
don't
lot
know
of
if this is
business.
interesting or not, but the top 50 agents
Mhm.
sold 4.3 billion.
The top 50 sold.
The top
yeah.
50 that work full time.
Work
See,
there.
this is a
And
thing.
they have, yeah.
Yeah, you want your agent and your lender to be full-time people.
Yeah, that's pretty interesting, isn't it?
Yep, 4.3
Okay,
billion.
a lot of sales. That's a lot of sales
It's-
across the board.
yeah,
Do you see? Okay, let me before I go. We've been talking about that the luxury market is just taking a dive. A lot of listings out there.
We're still making sales, but they're slower and they're lower.
There's a 2 year
Slower and lower.
Yeah, there's a 2 year supply of inventory in that market. The lower market, though, all right. Tell me is that where most people are coming into, or where are you seeing that part of the market?
I tend to be probably a little bit higher than that, probably around 350 to like my LA guy's 800,000 that he just got in
Yeah.
contract on. But it's just one of those things that I would say probably 250 to 400 is probably the majority of my business. I mean, if you get any kind of a house that's 230 or less, you're going to have just
Some problems.
so
with
many
it.
either problems with the property, the asset, or you're going to have problems with just everybody trying to buy that particular piece of property. So I know you've had a couple of them recently.
Yeah, they're quick transactions, and when they're on the market, they seem to be off
Yeah,
pretty
and
quick.
So anything under that range, are people buying cash, Alice, you think, for properties into that 250, 220, 170? There isn't much. I mean, there's not much out there.
Yeah,
and we're low of inventory
And they're
anyway.
and they're problematic, like
Mhm.
like these guys are saying they are
Yeah.
problematic. And the area average is $309,000, which I
Yeah,
thought
wow.
was high. It's higher than the national average for sure.
309.
But yeah, 309
Well,
is our area
Okay.
average for 2019.
Okay.
That actually goes to a conversation I had earlier today also about a lady just wondering, hey, I think I'm just priced out of the market. It's too far gone. And I'll never forget that house, the last one that my kids grew up in, that I bought thinking, maybe I'm a little bit out of my comfort zone on this thing. And looking back, I'd buy 100 of them like that just because, rents just keep going up no matter what. And it does, it does pay to own your own house if you can get into it and it makes sense for you. So, just come in and talk and just run the numbers.
It's always really amazing how many people you come across, and if you come from another part of the country where housing prices are not very high.
Right, the Midwest
And
or
you
Texas.
come in
yeah.
here, and you say, I got $150,000, and I got this from my 3-bedroom, 2-bath house where I was,
Uh-huh.
and what can I get here? And the
tough.
answer's not.
It's really
basically
tough.
nothing.
Right,
Right.
but we have a lot of zoning and planning ordinances, I think, that drive the prices up just in our state,
Yeah.
generally speaking. But then we're highly desirable.
Yeah.
And so you put those two together, and I think it
Yeah.
makes for more competition.
Here's something for the state of Oregon, the legislature. Okay? Did you know that we have a new housing needs analysis update in our cities? Did you know that was coming to a city near you?
And is that different than the energy?
Oh, yes, this
analysis?
is different. This is a
Okay.
housing analysis.
Yeah, no, so this is new. Enlighten us.
Well, Grants Pass, of all these cities here, Grants Pass is supposed to be first to
Oh.
have a housing analysis adopted, which is supposed to give us, I guess, opportunities to what our housing inventories are like.
Well,
What a waste of, I read this thing, this is the biggest
So is that a
waste of time
study?
I've seen, yeah. And every city over 10,000 has to do it. Anyway, that's kind of a dumb
my
thing
Well,
I've
we
ever
should track
seen.
that and see what the results are. That'll be interesting.
Yeah.
They could just ask us, because we would know.
They give you pretty good.
Well, there was
inventory
actually a lot
out
of-
out of the well.
part of the Obama era legislation that came out was a lot of feasibility as far as going into houses if you're going to lend in any of these major cities, just making sure that disadvantaged people weren't, just more and more regulation. I believe that the Trump administration is rolling some of that back. I actually brought in an article but didn't have time to dig into it. But I'm thinking that a lot less just talking about things and just loaning to people would probably be a little bit better.
Well,
than
our state, and I will say one thing, our state has made big changes.
Yeah, especially with the rent control.
With the rent control
and
thing that we have, and
filling
now with
in.
and filling in with the mixed use, in single family residence.
Mhm.
And those are two huge changes. Although we still haven't gotten any. Next week, the Metro Building Department, by the way, is going to be in here, and we're going to find out if anybody's applied for.
Well,
any of
but I
those things,
talked to
right?
them just last
Yeah?
week
Okay.
because I have people that want to start putting 4 dwellings on one lot
Okay.
without doing a partition or a
Okay.
lot split, as I
Yeah,
call it.
all right.
And the city said they're at least 2 years away. They won't even start public hearings for a year or more. And so if you're in a situation right now to make a decision, you need to make the decision based on the old laws, knowing that the laws are going to change. So that's
2
why,
years.
yeah, that's why nobody's going to apply.
Well,
But
no-
that's Medford.
I would say no wonder nobody's applied.
Yeah.
You can't wait 2 years to. Okay, see, that's why we have these. That's why we cannot ever settle our housing issues.
But the
because we
rent
simply-
control went into effect. Those
Yeah.
laws went into effect without missing a beat, without even forms. So
They went ahead, yeah, no one even
and
knew
the
what to
rents are
do.
still really high because a lot of landlords started selling their buildings.
You still see that? You
I still
some
see
of
a
that?
lot of that, yeah. But I also see a lot of buying. Do you guys have a lot of investors buying right now?
Not investors as much. I get some calls on that, but I usually just deal with people buying their first or second home, or
Yeah.
sometimes investment.
So we have these
properties,
multi-generational family units
Mhm.
that are competing for the 3plexes, the 4plexes.
Yeah,
Wow.
And then they're going to live in them. They're not going to be
They're not
tenant
not necessarily
occupied.
renting them,
They're
right.
for their family members.
it's not a bad.
Isn't that
idea.
an interesting?
That is interesting.
Yeah.
Yeah, but I mean, that is 90% of what I see when people want to retire here, but most of them, it's because they have family here or they had family here, and they have some kind of roots here. So people do want to get closer to family, and I guess there's no way to get closer than that.
You want to do a really good research paper would be on. We always talk about how our best and brightest from high school leave our valley every year. And go.
Not all of them.
Not all of them.
Derek is here.
But a lot of them leave. And it's fascinating is I've met so many who have come back and they've taken their family back with them, their husband or their wife who come back with them, and you say they come back because the family wanted to be here. That's a fascinating number of people who move here.
Mhm.
They have brought their skills with them. This person, a doctor, was when I was talking to. So that is
It
out
is-
there as well.
It is nice to see them come back, or the ones be able to get into a job here that they can stick around. Because as a father, looking at 2 kids that are about that age right now, I'm really hoping that they stay somewhere semi-close. Of course, my young barrel racer probably wants to be in Oklahoma or
They'll
something.
probably go, they're leaving, come back in 20 years. Either way, they'll never kind of go
Yeah,
away.
you just
as
got
well.
yours back, didn't you?
I did in 20 some years.
How-
20 years. It was
20
gone.
years?
Yeah.
Yeah.
And now we're all back together. But people want that. I tell you, that lure of family, whether it's the adults going to meet with the children somewhere where they live, okay, and they're selling the house, or the family, the kids are coming back here to move back in close to where the parents are.
Yep.
or brothers and sisters and things like that. The lure is so strong, and it's really pulling lots of people and driving a lot of our market again too, especially with all the boomers at the age, the retiring age.
Well, and they're active and healthier than, decades before. So this is an absolutely wonderful place to be with your family,
Right.
whatever side you're
Yeah.
on, and have a lot of stuff to do.
Okay, before we got a break coming up here, rates this year staying the same. Presidential year, I think they're going to stay pretty much where they are. What do you guys
That's a
think?
great question, though. What do you guys
I mean,
think?
I absolutely believe that. I mean,
I
we're,
agree.
we're going to have probably anything that's going to get weird is going to be a little bit closer to the election, and it's going to more so have to do with just uncertainty. I mean, the stock market is just it's still on a tear. It was up another 160 points, today. And we just keep having really strong economic data, so they're going to have to look for something to kind of tear that down. Otherwise, it's like, why elect us? And then the side that's in is going to be like, no, we're great, And so it's going to be a lot of back and forth and uncertainty as far as at the end of the day, whoever gets elected, it'll still be a good market around here. But probably getting towards the election, it's going to be a little strange for people wanting to move, just because they'll just want to see which direction this thing's going to go before they do it.
No predictions past November.
Well,
That's a good way to look at
What are the
that's a good way to look at
chances that the
things.
rates will go down?
Well, depending on wars and different things like that. I mean,
Wow.
it's true though.
Isn't it when the stock market goes up, rates generally go down, right? Isn't that traditionally?
If the stock market goes up, then your rates go up.
Rates
It
go up?
just it just depends on where people are putting their money. If they're putting them into long-term investments, like these, this is a 30-year deal,
Sure.
which probably somebody won't keep their loan for 30 years. But if you're investing in the stock market, generally you're not investing in these. So uncertainty is what kind of helps these, because then people get nervous and they want to, they're guaranteed this rate for a certain amount of time. So the bonds and the
what would
treasuries.
you rather do right now? Buy real estate or invest in the stock market?
If I had all the money in the world, I would do both. But I do real estate first.
What would you do?
Right now, I think the stock market is overbought. So I think real estate is a good investment.
And most Americans
But real estate's
think
always
that.
a good investment.
And most Americans think that too. It still is
Yeah.
the best and safest
I would do
investment
that
Derek,
first.
where did you
there
do
is.
your money?
Especially in our region,
Yeah.
especially here in Southern Oregon. I just do love the area. There's nothing. I just have nothing bad
We
to
are
say
so
about
lucky,
it. We are
yeah.
very lucky. So I think I'd double dip and go real estate as well.
Do you own a house yet?
All
I
right.
do. Yeah.
Good. Now it's time to buy an investment.
Exactly.
We got a break coming up here. One more segment to go here on the Real Estate Show today. Don't forget you can check out any of our past shows at realestateshowOregon.com. We're coming right back after this.
As we get to,
Welcome back to the Real Estate Show on KCMX News Media 880 and YouTube at realestateshowOregon.com. Pete Belcastro, Alice Lema with you today. Thanks for joining us here on KCMX. First of the year, January 11th is our show date for this one. And as we go on, I can't wait till spring. The 6 selling cycles of the year. We're just starting in January, starts to go back up now. End of January really shoots up.
Yes.
We're talking about inventory and selling and that
the
kind of
number
thing.
of properties
Yeah.
available.
Yeah.
But last year we had so many come on early because they were worried about the fires.
Oh,
So a lot of
yes.
people wanted to be in front of that. And then this year, I think we are just going to have a lot of inventory in the first quarter. And I'm basing
Okay.
that
On what? Okay.
conversations with
Okay.
other agents and my own business, because I'm just one
Okay.
agent.
Right.
And I have 8 people that have said they want to list their house in the last 6 days.
Really?
Yeah.
Has that been because they've kind of been holding on to them?
They've been. It's a
long,
combination
what we
of
talked
what.
about?
Yeah, it's a combination of what Guy Giles was talking about. An election year, they're trying to figure out what they're going to do, the interest rates and all that, and they just said, you know what, we don't want to worry about it anymore. We're just going to do it right now.
Okay. All right. By the way, this is Guy Giles and Derek Brite from Mutual of Omaha Mortgage, and they're our mortgage resident lending experts. And anything about lending, Guy's the guy to go to. One of the loans that you still have, the loan that I thought was one of the coolest loans of all, was if I wanted to buy a place.
Cross
Was
collateralization.
not the contingencies. Are you still seeing contingent offers a lot
Oh,
about
yeah,
it?
we have so
tell me
many of them.
what you think of that right now.
Yeah, we still have the availability for it. I mean, if it fits into the right, if it fits you, then yeah. I mean, it's something that I've used a few times.
Now that's a
Costs a little bit. I mean, I don't mean to sound negative about it, but it costs a little bit of money to get it done.
You call it a cross collateralization
Yes,
loan, but it says it allows me to buy a house without making a contingent offer on another one.
Correct.
Okay.
Yes. Yeah. As long as you have at least 20% equity in that house that you're selling.
Yeah.
And it does have to be, for title reasons, a house that's in Oregon. So it can't be one
Okay.
that's moving up from California, unfortunately. Otherwise, it'd be the greatest program in the world. But the rates are actually, really competitive on it. I haven't priced one out for a couple months, so I can't quote you on it right now. But it's definitely a viable option if it's a difference in getting in a house or not getting in the house.
I love
So-
that. I think that's a great.
Well, in a competitive environment, boy, it really makes a difference if you write that offer without
Without the
saying,
contingency.
that you have to sell your house.
I've been in contract for 3 months on one that the gal hasn't been able to sell her house yet, and they keep extending the escrow. And anyway, hopefully soon.
Well, we were involved with one contingency this year where there were like 5 different buyers involved. You know, one had to sell here before this one could sell, before that one could sell.
I'm surprised they all agreed
And
to that. That's a long
everybody
train.
agreed to it.
Did it work out?
It did.
Yay.
Honestly, it did. After craziness, but yes, it actually did work out though. But again, it's the being able to buy it without the contingent offer makes again your offer so much stronger in the eyes of the seller, and that's the important thing if you're trying to buy it.
And that's why it's good to have. We talk about us understanding our business and being able to customize something for you. That's why it's good to have your own agent. I get so many people that come in and I just want to talk to the listing agent, or I just want this. Having somebody that's just working for you. That's not. If you look your house up on Zillow, that's only going to be as good as a public record. They're not accurate at all. Every now and then they might, blind squirrel thing, sometimes it'll happen, but having somebody, like Peter Alice in there that knows what they're doing, that knows the market. Zillow's even offering to sell your house for you now. Well, I'm sure they're probably giving you top dollar for it if they sell it.
Well, there's just tangent.
Top
there's
dollar.
there's some.
Yeah, I'm teasing.
Yeah.
There's some legal issues with that. There's a prediction of some lawsuits, future lawsuits.
Yeah.
With
Well,
that, yeah.
But just having somebody that's local, that's working for you, give one of these guys a call, and I'm sure you can find their contact information by just Googling it. But
Yeah. I still think certainly in the lower price ranges, the biggest thing is for sellers is to have the house as best ready to go as you can. We talked about this last week in pre-home inspections and being a seller and taking control of the sale. If you do these pre-inspections, so you know what you've got, so that you give it to the buyer, and you help it along, right? You got to help yourself.
Yeah, and not only that, it speeds up the sale. There's a lot more trust. Everything goes more smoothly. And there's much better disclosure, and I didn't think of this till just now, but for future issues, as a seller, when you provide all of that disclosure, you are so much better protected.
Oh yeah, absolutely. And I think I was convinced last week again with Kim Ramsey, a pre-well test. If you had an old well, even a deep well, it's shocking to hear what's happening underground here. As we heard last week.
Always changing.
You want to have the test. You want to protect your family. Again, you're smart with what you're doing. Because a bad well, it's going to ruin a deal. Right?
Oh goodness, yeah.
You
got to have good water.
Oh, yeah. Good water, good septic.
Yeah.
Gotta have and the horror stories you hear are crazy. Yeah. But we're almost out of time. I just want to tell you as we begin this year that again. I think rates, as we've agreed, are going to probably stay
Absolutely.
where they are, maybe a little bit lower, maybe a little bit higher, but not much more from where they are, which I think is going to drive a market. Our market, however,
anything
needs
under
listings.
6%, you're doing great. Historically, so our rates are really good.
That only works when you're above that or something. That's 6% thing. Right?
Well,
But it's a big difference in your payment, between 6% and 3% or 4%.
Really is.
Well,
Are they going to change? I read that they're going to be changing the way those credit scores are actually developed, not just totally relying on is that going to happen?
They've already started doing some of that, and there could actually be some problems with that where they're hiding it from your credit score, but then some judgments or something could pop up on the preliminary title report. So it's always good to, go and do both steps and work with somebody that's going to look beyond just your credit score on that, because I haven't got bitten on it, but we've definitely found things that could have potentially bitten somebody. And I've had people pre-qualified online with some online lender that they didn't go and take that second look. But believe me, by the time that title report comes out and you're 2 weeks into contract, yes, it will come out.
Well, the biggest thing I've learned from you over the years is that you need to go get the credit report with the lender.
Mm-hmm.
Sit down with the lender and get all of that done so you know what you've got. Again, don't waste time until you know what you're qualified to look for, right?
Yes.
And that's going to be the number one step. Start.
And that's another thing. If you just go and they say, "Oh, you're qualified for 800,000," well, is that really the payment that you want? You know, you want to talk to somebody. And I mean, I've heard Derek is new as, you know, he's been doing this for a while, but you know, back there asking people the right questions as far as, you know, he bought his first house less than a year ago, and so it's fresh on his mind. And, you know, I mean, you don't want to get in over your head. You know, there's things you want to do. Take the kids to Disneyland or do something.
Yeah, well, getting that credit score first is the biggest thing. So go call them. Because
and early, and that way you can at least address some issues.
And Alice is predicting that we're going to have a lot of inventory here at the beginning.
In the beginning.
Of
She's got 15 days to do that.
I said first quarter.
Oh, okay.
First
Well,
quarter,
that's the end of March. Where did I do that?
First 90 days. I think we're going to have more than we expected. And I also think the rates might go down a little, which would be weird.
Is it going to put pressure on prices?
Well, I think there's other pressures on prices. I think in my opinion, the market is really flattened out, and it's just where it is. So this idea that you can charge more in the spring and go down later in the year, I don't think we're going to have that much wiggle room.
No. Price it right the first time. I mean,
price it right the first time. 53% of the sales in Southern Oregon happen in the first 30 days, and it's 98.9% of asking price.
And if it goes down after that,
it goes down fast.
Yes, you don't want to be 6 months still sitting on a listing, because that's crazy. You're not priced right. You got something wrong.
Well, and you still have to keep your house clean.
And make it make it as move-in ready as you can. That's the thing that Derek, I get with buyers so much with that. Right.
What's a good phone number for you, Derek?
541-621-9532.
It's basically to Google Mutual Omaha Mortgage. They'll come up and you can give them a call. Please do so. So thank you guys. Appreciate that. We'll see you next
Thanks for having us.
Information.
We'll see you next month and see what happens in February when we get together again with you. All right.
I'm going to see all this inventory. It'll be nice.
It would.
We're going to have lots of inventory.
She knows what she's doing. I'll bet it'll be there.
That'll do it for the Real Estate Show. For Alice Lema, I'm Pete Belcastro. Thanks to Gavin Thering for our Rent Our Camera today as well. Hey, that's a first part of January. Go out and make it a great week. Thank you for joining us. We'll see you next week back here on the Real Estate Show, and God bless you all.